Hey, hello everyone. Welcome to my session on risk management. Today, I shall talk about three important things which are related to your risk management subject. These are number one, what is internal control? Number two, where and when the risk management should be applied. And number three, what is corporate governance and why does it exist? So let's begin with understanding about what is internal control. So internal controls are the procedures and processes in place at an organization to make sure everything operates smoothly and mistakes stay very rarely. This includes things like building standard operating procedures, quality assurance, and auditing. It also includes the checks and investigations to make sure those standard operating procedures and the quality assurance processes are being followed properly, not just unused documents. So, internal control is a system that the company defines and implements under its own responsibility. It encompasses a set of resources, behaviors, procedures, and actions that are adapted to the individual circumstances of each company that, number one, contribute to control over its activities, the efficiency of its operations, and efficient use of its resources. Number two, enable the company to assess all significant operational, financial, and compliance risks appropriately. So, more specifically, the system aims to ensure four things. These are number one, compliance with laws and regulations. Number two, implementation of the instructions and directions given by the executive management or the executive board. Number three, proper functioning of the company's internal processes, especially those relating to the protection of its assets. Number four, reliability of financial information. Therefore, internal control is not limited to a set of procedures or to accounting and the financial processes. Now, moving ahead, let us try to understand where and when the risk management should be applied. So, when we talk about the risk management, we should understand that different types of decisions are being made within an organization. So risk management should be continuous. The decisions vary on whether long term, medium term, or short term. So based on the decisions, the durations of that particular decisions, we call it as strategic decisions, program and project decisions, and operational level decisions. So let us understand what are strategic decisions. So these are basically related to long-term goals. These tend to set the context for the decisions at other level within the organization. Number two, we have programs and project level decisions. So primarily these are related to your medium term goals to bring about the change. These are narrower in scope as compared to the strategic ones. Finally, we have operational decisions which are related to your short term goals and are concerned with the ongoing continuity of the business services. So when we talk about these decisions, these are related to strategic, program, project, and operational levels. Moving ahead, let us try to understand what is corporate governance and why does it exist. So corporate governance can be defined as the set of the processes, customs, policies, laws, and institutions affecting the way a company is directed, administered, or controlled. Now the question comes, why does it exist? So management of risk must be rigorously applied when critical decisions are made. So therefore we require corporate governance. Corporate governance has been designed to protect the assets, earnings, the overall reputation of the organization, as well as it is a system by which organizations are directed and controlled. So board of directors are responsible for the governance of their organization. Their responsibility generally includes setting the company's strategic aims, providing the leadership to put them into effect, then supervising management, then reporting to the shareholders on their success. So shareholders' role is to appoint the board of directors and auditors to ensure effective governance is in place. The role of audit committee is to support the board and accounting officer by reviewing the effectiveness and reliability of assurance. Now finally, I would say that The corporate governance is effective due to internal control, which is possible because of the risk management. So that's all from this particular session. In my next session, I'll talk further on the risk management topic. Till then, stay connected. Thank you so much.